Do you need an edge? Do you need to have? Do you even have to even know what an edge is? Is it possible to just be to walk up to your computer and the arrow happened to be on the buy button? You click and then find yourself in a winning trade. You didn't have an edge, did you? You just clicked it. What did it take? It took nothing. Do you need a plan? Need no plan. Do you need the discipline to execute the plan? No, you don't need that either, do you? Now, see, you're going to see the opposite of all this, of course, is what we're going to be talking about in terms of creating consistency. But go ahead.
What you're saying is a blind squirrel will eventually find a nut. What you're saying is a blind squirrel will eventually.
Did you say a squirrel? I'm sorry,
yeah.
Squirrel.
Squirrel.
Okay, squirrel. Okay, go ahead.
Yeah, I can click a mouse. The arrow hits the buy. I click. I get a great trade. That's good. It's all the things that lead up to me. That's the implementation. But what about all the things that lead up to that implementation?
Oh, I understand. I'm not negating that at all. I'm just saying that the reality is you don't need anything. That's all I'm saying, because I'm contrasting here. I'm just making a contrast between what you need to be consistent and what you need to win.
Oh, okay.
That's all I'm doing, okay?
You just summed that up with what I was about to say. There's all the difference in the world between having the skills necessary to experience a winning trade as compared to having the skills necessary to consistently experience a winning trade.
Absolutely. That's all I'm talking about here. Because see, because what this does is the not understanding this contrast creates what I call like a huge psychological gap. Because because it's very easy for us to think that trading is easy. And if you believe that trading is easy, even if all your experience is starting to tell you that it's not, it doesn't mean that experience is dropping down to a level of realization where you change your behavior or change the way that you think about trading. If your first impression, if your first experience was that this couldn't be simpler. And then you spend, how many X number of years or half a lifetime finally coming to the realization that, you know what? Yeah, to win, like what do you need? Like I could be in a casino and plunk $100 bill down at a blackjack table and end up with a blackjack. What did I need? Nothing. I just happened to win. Now, if I want to be a professional blackjack player and make a consistent income from playing blackjack, well, that's a whole nother matter, isn't it? And we're talking about the same things here with trading. There would be a number of skills that I'd have to acquire to be able to make a consistent, reliable income as a blackjack player. And there are people who do it. Do you need a good reason to put the trade on to win? Do you need a good reason? No, not at all. What characteristics distinguish the pro from the typical trader? Well, they plan their trades. No. They execute their plan without error. We'll talk about trading errors in a minute. Big difference. Okay, they can move in and out of their trades with an ease and effortlessness that would boggle the mind of the typical trader. Okay, what do you need to achieve consistent results? Well, you're gonna need an edge. You're gonna be able to identify an edge. You're gonna have a trading methodology, are you not? Right? Okay? And you have to have a plan on how to utilize that edge. In other words, you're going to have to determine risk parameters. How much does it cost me to find out if this particular edge that my methodology provides me, how much is it going to cost me to find out that this edge is working on this particular trade or not? That's your risk parameter. Are you guys with me on this? Okay? Money management parameters. In other words, how much in other words, contract size or number of shares that you trade. All this has to be taken into consideration. You could have a standard amount, or you could have an amount that fluctuates based on other criteria that you use, to determine, the level of trade that it is. Like it could be like a 5-star trade or a 1-star trade. With a 5-star trade, you go in with a maximum position, or the 1-star trade, you go in with a minimum position. And profit objectives. You have to be able to set profit objectives. See, just having a methodology to get you into a trade is not enough. You have to be able to determine what the risk is on a consistent basis. You have to know what your money management parameters are, and you have to be able to determine where to take profits. None of these are easy things to do, are they? Trade execution. The ability to execute trades flawlessly so you can utilize your trading plan to its maximum potential. This is the big one right here. This is the area, because when you get right down to it, trading is about trading is execution. The act of trading is executing trades. And if you're going to execute trades, you're going to have to be able to do them without errors, because it doesn't make any sense to think that you will achieve a consistently rising equity curve if you're constantly making trading errors. Trading errors would be defined as mistakes. Mistakes that detract from your bottom line results. Now, the interesting thing about mistakes is that when you're trading from let's say the perspective of, it doesn't really take anything to win, then there really aren't any mistakes that you can make, because anything that you do could result in a winning trade for any reason. But when we're talking about making consistent money or an income that we can rely on, then everything changes about this. Everything changes. What I'm talking about here is I'm talking about these like 5 or 4 broad skill sets to be able to create consistent results, the kind of results that you can rely on as an income. You're going to have to learn an edge. You're going to have to acquire a trading methodology that gives you an edge. I'm defining an edge as that there's a higher probability of one thing happening over another. That's what an edge is. And we're going to learn the nature of probabilities here in a moment. You're going to have to have a plan on how you utilize that edge, meaning what the risk is, position size, and profit objectives. Then you're going to have to be able to execute. You're going to have to get to the point where you can execute that edge without making errors. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here. And I said this primary skill was learning how to trade without fear. Learning how to trade without fear is a function of learning how to think in probabilities. Meaning we're going to set aside or move from thinking in a trade-by-trade mentality. In other words, what this trade is going to do for me right now, am I right or wrong on this trade? And we're going to move to a series of trades perspective, because that's what your methodology does anyway. Any trading methodology just gives you a win or loss ratio over a percentage of trades. In other words, if I take the same criteria that's in any kind of technical formula that's mathematically based, or a technical price pattern that you would be able to see visually, what we're going to learn is that my edge, meaning a higher probability of one thing happening over another, is simply going to give me a higher win rate over a series of trades. Let's say the next 20 trades. 1, 2, 3, 4, 5, 6, 7, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. And that the actual, on a trade-by-trade basis, I don't know which one's going to win or which one's going to lose in advance. There is no way for me to find out. There's no way for me to determine that. That on a trade-by-trade basis, no matter what reason or rationale that you come up with, is that there's no way to assure yourself that it's going to be a winning trade. There's nothing that can tell you that. That trading methodologies give you a win percentage, let's say 70% of the next 20 trades are going to be winners. There's no way I'm going to know which of the 70, which 12 or 13 are going to be the winners, or which 6 or 7 are going to be the losers. What you're going to learn, and this is what the professionals have learned, is that there's a random distribution between wins and losses over any given set of criteria that define your edge. There's a random distribution. I will get a higher percentage of wins to losses, but I just don't know which trades are going to be. It requires a complete shift in the way you think about trading. When you make this complete shift, everything about your trading will change. Now, I'm expecting you to make it now because we're still in the introduction. We won't really get into the meat of this until a little bit, but this is where we're going. Okay, that's all I want to get. This is where we're going. You're going to genuinely learn how to think in probabilities, because when you have genuinely integrated these concepts into your mental system at a functional level, your fear will go away. You do not need to lose everything to get to the point where you can figure out that, well, I've got nothing to lose anymore, so I don't have anything to be afraid of. You don't have to do that, okay? You don't have to do that. All you have to do is commit yourself to learn how to think about trading in another way, and your fear will go away. Because what we're going to learn is the correlation between what we believe and what we feel. There's a direct correlation between if I'm going into a situation with a certain belief that, let's say, that my particular edge is going to tell me what's going to happen on this trade right here, I wouldn't even put this trade on unless I thought it was going to win. When you really understand the nature of price movement, which is what we're going to get into after we go through this section on skills, when you really understand that, you will never think that way again. When you really understand the nature of price movement, you won't think that way again. And that is one of the biggest problems that the typical trader has. Let's say the typical screen-based trader is that they really don't understand the nature of how prices move and the underlying dynamics, because you haven't had the exposure. You haven't had the exposure to the direct markets. Your only exposure has been those blips on the screen. And as a result, there's a real gap in understanding about what's really happening. When you understand what's behind those blips, what's behind those photons that show up on your screen, when you really understand that, you will think about trading in another way, in a completely different way. It won't even occur to you to do some of the things that you're doing now. It won't even occur to you. Okay, now, I've given you 3 so far. The next broad area that you're going to have to learn is like you can be an expert at defining an edge. You can even be able to execute your trades flawlessly, but run into the next challenge, and that's what I just call self-sabotaging beliefs. In other words, all of us have a sense of self-valuation. All of us have this sense that what we're worth as a person, you might say. And if you were to take like an old Ben Franklin accounting scale, okay, and this is positive and this is negative, meaning if you were to list every experience in your life, if you had, let's say, conscious access to every experience in your life that contributed to a positive sense of self-valuation, that yes, I am a worthy person, because what we're running into, I kind of got ahead of myself, what we're running into is this, is that when you learn how to define an edge and learn how to execute your trades flawlessly, what you're now exposed to is the possibilities for unlimited wealth. There's really nothing holding you back. Well, let's put it this way. There's nothing on the outside that's holding you back, but there might be something on the inside that's holding you back. Those things on the inside could be self-sabotaging beliefs. In the sense that if you listed all of the experiences that contributed to a positive sense of self-valuation and all experiences that contributed to a negative sense of self-valuation, that I'm not worthy as a person, I feel guilty about this, and this, that you could end up, you can go plus negative, or net positive or net negative. What could end up happening is that if you don't have the, let's say, the skills or the awareness to realize that as your equity curve, as you start making money, these internal forces, if you have net negative, these internal forces start building up to the point where they'll cause you to make unconscious trading errors, where you're not even really aware that you hit the sell button instead of the buy button. those kinds of things. And you have to become aware of when these forces are starting to build up inside of you, and either compensate for it by not trading, by to stop trading, or to find a way to neutralize them. And there are various techniques available. But all I'm saying is that these kinds of errors that are the result of self-sabotaging beliefs don't really have anything to do with your direct trading skills. In other words, your ability to identify an edge and your ability to execute your trade. But they can have an enormous impact on your equity curve.
I would assume that you would be monitoring your equity curve, and you would start seeing your curve go down in an abnormal way, and you would start looking for your whatever's happening to you. Let's say you're not feeling well, or whatever. Your wife just divorced you. Or maybe
Yes.
something.
Yeah,